Time for another stock review. Now, this one isn't on the screen because it's not available on Robinhood, and we like to show it on Robinhood. This is the company we're talking about. We're talking about Ondo Insurtech, on a mission to become the world leader in claim prevention technology for home insurers. Now, this is not going to be a full review like we've done before, because it's a much smaller company. There isn't that much information on it. It has a very small market cap of 43 million. It's based in the UK. It's a UK company. Anyway, let's have a look at it. If you like these reviews, please tap the like button. Consider subscribing to our channel as we head towards 100,000 subscribers. Very, very exciting time indeed. This was requested by one of my members, and I love my members. They built the show. That's why, if I just take that off the screen for a moment, you can see this fancy chair that was bought for me by my members. They call me the chairman of YouTube, and I do like that name, by the way. Very, very nice indeed. So let's get straight into it. What is it? There's not much information. This won't be a very long review. Home insurance is in a transitional phase from risk transfer to risk reduction. The insurance sector is in the midst of a transition from traditional risk transfer to model of sustainable risk reduction. In that context, Ondo has patented systems that reduces the risk of the number one peril on home insurance. Our mission is to lead this change with the global scale-up of LeakBot. Ondo's mission is to make LeakBot system the equivalent of a 5-lever door lock, something every home insurer expects every home to have as a standard. Ondo's strategy is to become the leading cost-effective solution for managing escape of water risk across North America and Western Europe, and from this defensible foothold to expand then into other perils through partnerships and acquisitions of complementary products and companies. The near-term strategy for the enlarged group is to drive the core business penetration in the UK, USA and Scandinavia, Sweden, Norway, Finland, Denmark. I know, I've been there. Growing top-line revenue growth to get the businesses to cash flow break even. Okay. There's very little information on this company, but we're going to show you what we can as we do this. The market turns green. Been buying the dips today, and we're very excited to see the tariff news come out, and then my portfolio is going to explode. It could be up 15 grand in a day once we get that news. So it's going to be a big day when we get that, and the signing of the Ukraine deal. Are we getting it now? We did expect it today, so we're waiting for that. Let me share with you the letter just out yesterday from Ondo Insurtech. Ondo Insurtech, a leading company in claims prevention technology for home insurers, is pleased to confirm that Mutual of Enumclaw Insurance is expanding their LeakBot program. We just spoke about it a moment ago, to policyholders in Eastern Washington, Oregon, beginning Q1 2025. The expansion follows a successful one-year pilot project that delighted Mutual of Enumclaw policyholders and provided a compelling return on investment. So this is what they're talking about. We like this. This is very interesting, actually. I'm loving this so far. Anyway, it's a very interesting stock. Let's look at the business, and it's very, very small. Very, very small indeed. That's why I'm not showing you the stock on the screen. It's not on Robinhood at all. It's got a very, very small market cap of 43 million. It's barely a public company, really. It's just out, really, 43 million. The intrinsic valuation is accurate, but you know, it's such a doesn't have a meaningful market cap. It's hard to really give a long-term view on this. Base case, undervalued by 38%. Best case scenario, undervalued by 57%. Worst case scenario, undervalued by 25%. Intrinsic value makes perfect sense. Now, if you like my software, all my members get free trials, free discounts, and all the rest of it. There is the links in the chat for everybody watching now, or you can watch later. When you're watching later, it'll be pinned to the comments and also pinned below in the description. You might as well get my free trials. You might as well get the free software that I use all the time, and it's been very good to me. Let's scroll down. We've talked about what the business nature is, but you can see it's very, very small. It doesn't have much information. It's whether you like the fundamental principle of what they're trying to do and you like the insurance space. Up 18% revenue. Operating income is down 13%. Net income is down 48%. Free cash flow down 22%. Operating cash flow minus 22%. And EPS down 25%. Let's look at its balance sheet. Well, as you can see, 4 million in asset. Bloody hell, buy it myself. Not literally. 4.1 million in assets, of which 1.8 million is in cash. Now, this is very different, of course, than a tech stock or a stock selling pasties like we talked about this morning and sandwiches. It wants to hold cash. 50% of its money is in cash. Makes sense, right? Obviously, in this sector, 43%, all right, is cash. What about liabilities? Upside down balance sheet. 4 million in assets, 9 million in liabilities, of which long-term debt is 6 million. So it's in a lot of debt. It's in a lot of debt. Straight away, that's put me off. 72% long-term debt. Now, we have limited information. I don't know why it's in debt. Is it because it's a setup cost? Set the business up. It's borrowed lots of money to start up. Again, I don't like that. I like businesses that have funding. They don't have to go to borrow money. So I don't like buying businesses that are borrowing money because it's risky. And with debts, interest rates the way they are, yes, it's a catalyst if rates come down. But nevertheless, I don't like businesses that are in debt like that. That's not interesting to me. So it's not a buy from me. It might be a great thing, but if you're in debt, you're starting out with a load of debt, more than you've got cash, more than you've got a business, more than you've got profit. It's risky, obviously, because, well, obviously, they're in debt. They didn't have the cash. They had to borrow it from somebody. It wasn't well funded. 26.6% gross margin, operating margin, though, on the other hand, it's losing money. It's losing money servicing its debts, probably. FCF margin, 93% negative. These are terrible numbers. It's new, I have little information on it. I can't tell you much about it. But this is obviously, no matter what the reason for the debt or when it started or whatever, I don't buy a business that starts this way. All right? Okay. Profitability, 46%. Not bad at all, but solvency score is 41%. So despite its amount of debt, we're giving it a 41% because the low DE and short-term solvency. Long-term solvency, not good. Short-term, what we're saying is it's not going to go bankrupt tomorrow. It's got some cash. We know how much cash it's got. If we go back up to the balance sheet again and just remind ourselves, yes, we have 6.9 million in debt, but we have 1.8 million. We have a third. We could pay a third of our debts off. That's why it's not going to go bankrupt, but it's obviously burning through cash. It's not for me. I wouldn't buy this. Okay. So 41% solvency score. It's not going to go bankrupt. Long-term solvency is a problem. Short-term, no, it's fine. It's not going to go bankrupt tomorrow, but if it keeps burning through its cash, then it will do. All right. So it's not worth the risk. The sector isn't rewarding enough. Now you might say, well, 103% upside. This is according to Wall Street. I just don't buy businesses that are up to their eyes in debt. There are other places to buy and get good returns. But there's a great return, though, if this all goes well. 103% upside, 105% upside, 111. Now, you might notice from the best to the worst, it hardly moves at all. Well, that's the case. When you get these extremely highs, there's not much in it. So basically what we're saying is you do or die. with this. If you think it's going to work, if you think the company's going to do well, you should do more research on it. It's not going to go bust short term. Can it withstand the cash burn? Will it survive? You need to know more about the industry itself and more about the company directly, which I'm sure you could find out on the investor relations. But looking at this, it's not a buy from me. The markets are too uncertain. Rates could be up for longer. I mean, they're coming down, but this has got not going to have that much relief. It's a competitive space. In fact, I can actually do. Where is it? I've actually got some AI software here where I can do. Let me see where it is. I'd like to add a little bit more, if I can, to this review. Here we go. What I'm looking for, and I'm asking it a question now, what are the unique competitive advantages of this company? Why you might want to buy it for competitive advantages? Because if it doesn't have anything competitive about it, then really what is the point? Okay. Well, I will share with you what I've just been able to ask ChatGPT. What are the competitive advantages? Let me share it with you on the screen. This is what I've just discovered. Can you see all of that? There you go. So this is what we've just discovered from it. Ondo Insurtech, operating in the insurance spec, likely holds several competitive advantages that differentiate it from its rivals. While I don't have specific internal data on Ondo Insurtech, typical competitive advantage in the insurtech domain might include technological innovation. Ondo Insurtech may leverage advanced technology solutions such as AI, machine learning, or Internet of Things to streamline insurance processes, improve customer experiences, and reduce costs. Data analytics proficiency. Access to comprehensive data analytics can allow Ondo Insurtech to offer personalized insurance products, better risk assessment. That's what this company's about, really. Using that technology, and predictive capabilities, which can enhance underwriting effectiveness and customer targeting, and else customer-centric platforms, a user-friendly digital platform that simplifies the insurance processing process and offers intuitive user experience can be significant advantage, leading to higher customer satisfaction and retention. And then we go on to other things less important. So there may be some advantages with this company. I wouldn't invest in this until I knew more about, and I'm talking, when I say more about the company, I mean watching its in earnings, listening to what they're saying, attending those seminars. I wouldn't be touching this until I knew what made it special. I don't want to buy a business that has piles and piles of debt. Anyway, there's my thoughts on Ondo Insurtech. Thank you very much for this request. So click above my head for all the links down below in the description. If you click above my head or down below, you'll find it's called the More button. It reveals all the links. Or look in the description, or in the comments, you'll find all the software the software that I use. You can have a look at that. And everything else. Okay, over here I shall put my the playlist for Ondo. I will create its own playlist. So if we do a review or we do more news, someone requests it, it'll be added up here. And down here I shall put the Alpha Spread playlist, which is all the stocks I've reviewed. Must be over 200 now reviews. You can go and check that out. So thank you very much indeed. Until next time, as always, take care of yourselves and each other.